Hey guys, what's up? I'm Erin and welcome back to the channel. You've probably heard a lot of things about Social Security over the years, from friends, from coworkers, from headlines, even some workers at Social Security field offices. But here's the thing, a lot of the stuff we've been told is wrong. In this video, I'm walking you through the most common myths people believe about Social Security. And more importantly, I'm going to give you the real facts so you can make the smartest possible decision for your future. Claiming benefits doesn't mean you're done working. So let's talk about what happens if you claim early and keep earning an income, or you want to grow your benefit later. Myth: if I claim before full retirement age, my benefits are lost forever. This one causes a lot of unnecessary panic. The idea that you claim Social Security early, but then end up working and earning an income and you experience a reduction in benefits, the idea that these benefits are gone for good. But that's not how it works. Yes, if you claim before your full retirement age and earn more than the annual earnings limit, some of your benefits may be withheld. But here's the key: they're not lost, they're just delayed. Let's say you claim Social Security early, at the age of 63, but then you end up working full-time and your earnings bring you over the annual earnings limit. So Social Security withholds some of your benefits. Once you reach full retirement age, they will recalculate your benefits to ensure that you get paid back for any months where you didn't receive full payouts. In other words, you get a higher monthly payout going forward to make up for those months where you didn't receive full payments. So think of it like this. Don't think of it as a penalty or a fine. Think of it as a temporary hold. And once you hit full retirement age, Social Security adjusts your benefits to catch you up. So no, working while earning Social Security, even if you exceed the annual limits, isn't throwing away money. You just might end up delaying some of it, but that delay does eventually get factored in. If you're planning on continuing to work in your early 60s prior to full retirement age, maybe a better course of action is to not claim Social Security so you don't have to risk going over this earnings threshold and have a temporary hold on some of your benefits. Because once you reach full retirement age, you can earn as much as you want and it doesn't affect your benefits in any way. The bottom line, if you claim before full retirement age and earn above the annual limit, you may have some of your benefits temporarily withheld, but they're not gone forever. Social Security will recalculate your benefit once you reach full retirement age, and then your monthly benefit would get a boost. So don't let this scare you away from going back to work if that's what you decide is best for your situation. Myth: claiming early at 62 means I'm locked out of higher benefits forever. This is a pretty common misconception. For those who claim early, maybe they decided that they still wanted a larger benefit, so they regret this early decision, but they assume once they've already claimed, they've locked in this lower benefit for life. But here's the truth. You can increase your benefit even if you claimed early. Let's break it down. If you claim Social Security at age 62, your monthly benefit is permanently reduced compared to what you would get at your full retirement age or if you waited until 70. That reduction is real, and it's based on the fact that you're receiving benefits over a longer period of time. But there's a special option once you reach full retirement age. You can choose to suspend your benefits. During the suspended period, your monthly benefits can continue to grow. Specifically, from full retirement age to the age of 70, your benefits can grow at a rate of 8% per year, and this is thanks to delayed retirement credits. Let's say you started collecting Social Security at 62, and by 67, your full retirement age, you realize you'd prefer a higher monthly payment going forward. You can tell Social Security, pause my payments, and starting at that point, your benefit will begin to grow again, up to 24% higher if you wait all the way until the age of 70 to resume collecting. Claiming early does reduce your benefits, but it doesn't mean you're stuck forever. If you decide that you want to pause your benefits and increase what that payout would otherwise be, you have that option. Now let's tackle some of the more surprising and often frustrating parts of Social Security, like taxes and how the system treats higher earners. Myth: Social Security isn't taxed. This one catches a lot of retirees by surprise. The idea that once you start collecting Social Security, you receive those benefits entirely tax-free. Unfortunately, that's not always the case. If you're a lower income earner, it's unlikely that you'll pay anything in the way of federal taxes on your Social Security benefits. However, once your household income exceeds certain thresholds, a portion of your Social Security income can be subject to tax. And keep in mind that these thresholds are not adjusted for inflation, so every year we end up with more retirees paying taxes on their Social Security benefits. So how does it work? The IRS uses something called combined income to figure out how much of your Social Security benefits are subject to tax. Here's the formula. Your adjusted gross income plus non-taxable interest plus half your Social Security benefits. For individual filers, if their combined income falls between $25,000 and $34,000, up to 50% of their Social Security benefits may be taxed. If their income exceeds $34,000, up to 85% of benefits may be taxable. And for those married, filing jointly, if combined income is between $32,000 and $44,000, up to 50% of benefits are taxable. If the income is exceeding $44,000, then up to 85% of benefits could be taxable. One quick important note about OBBB, or One Big Beautiful Bill. There's a bit of a narrative being pushed that this bill essentially makes Social Security benefits tax-free for the vast majority of Americans. But while there is a new senior deduction that can absolutely help to lower your tax bill, note that OBBB certainly does not eliminate federal taxes on Social Security. So Social Security income can certainly be taxable. It depends on your total income threshold, and ultimately up to 85% of your benefits could be taxable. It's never more than 85%, and they're not taxed at a rate of 85%. It's taxed at your ordinary income levels. And while your benefits are never taxed in full, it certainly doesn't mean that they're always tax-free either. It depends on your situation, and understanding how combined income works can help you strategize your withdrawals and create a retirement plan that works for you. Myth: Social Security doesn't count for high earners. I won't get anything back. This is a common belief, especially among higher income earners who are paying into Social Security and decade after decade, maxing out their payroll taxes, thinking, oh, I'm not really going to get much back for this. But the truth is, if you've paid into Social Security, you will get something back, even as a high earner. Yes, Social Security is progressive. It's designed to replace a larger percentage of income for lower earners and a smaller percentage for those at the top. But that certainly doesn't mean that higher income earners get nothing. In fact, if you had a high income earning household with two high income earners, you could ultimately receive Social Security benefits that are near six figures. That's a meaningful payout. For lower income earners, Social Security is designed to replace maybe 75 to 80% of their income. For middle income earners, it's designed to replace about 40 to 50% of the income they earn during their working years. For high income earners, only about 25 to 30%. And for max earners, 20% or less. Let's say you were a high-income earner all your life who consistently maxed out Social Security taxes on your wage base, and you did this consistently for 35 years. At full retirement age, you could receive the maximum Social Security benefit of $4,018 a month, or over $48,000 a year in guaranteed inflation-adjusted income. Over a 25 or 30-year retirement, that adds up to over $1 million in benefits. Now, if you had that money privately held and invested it yourself, would you be able to generate better returns? Probably, but it's certainly not nothing. The bottom line, Social Security may not replace a large share of income for higher earners, but it still provides guaranteed lifetime income, inflation protection, spousal and survivor benefits, and some of the best longevity insurance that money can buy. So while the system is certainly more generous to lower income earners, it still does reward higher income earners with diminishing returns at the top. If you've paid into Social Security, you're certainly going to get something out, and that something just might end up being way more than you ever expected. Finally, let's clear up some of the most misunderstood rules around who's eligible, including spouses, ex-spouses, and those who didn't work outside the home. Myth: an ex-spouse's benefit reduces my own. This myth is surprisingly common and deeply emotional, especially for those who've had long marriages and then subsequently difficult divorces. This idea that if your ex were to claim benefits on your record, that it would somehow reduce your benefit. But that's not how the system works. If your ex-spouse claims Social Security based on your record, it doesn't affect your benefits at all. Zero, zilch, none. You still qualify for 100% of your benefits. Social Security handles these claims completely independently and completely behind the scenes. You don't need your ex's permission. You don't even have to let them know that you filed on their claim. Social Security won't let them know. Here's how it works. If you are married to your ex for 10 years or more, you're now divorced and not remarried, or at least 62 years or older, and your own benefit is lower than what you'd receive based on your ex's record, then you may be eligible to receive up to 50% of your ex-spouse's full retirement benefit if you wait to claim at your full retirement age. If you file before full retirement age, you will receive a reduced benefit. But I want to reiterate, you don't need to contact your ex. You don't need their permission. They don't even have to know you filed. Social Security doesn't take a piece of their benefits and give it to you. They calculate these numbers independently. It doesn't affect their benefit at all. Even if your ex has remarried, you can still claim benefits on their record, so long as you haven't remarried, unless it's after the age of 60 and unless you're filing for survivor benefits. But that's a different rule, and I do have an entire video on it, and I'll link it above and down below if you want to check it out. Myth: if I didn't work, I can't get Social Security. This one is very discouraging and often misunderstood. People feel like if they didn't work outside the home or they didn't directly pay into Social Security, that they're not entitled to benefits. But here's the truth. Even if you never worked outside the home, or maybe you worked very little outside the home, you still may be entitled to Social Security benefits if you claim on your spouse's or ex-spouse's record. Here's how it works. If you're married to someone who qualifies for Social Security, and you're at least 62 years old, and you've been married for at least 1 year, then you could receive up to 50% of your spouse's full retirement benefits, even if you never worked a day in your life. As you can imagine, this provision of Social Security can be pretty controversial, but nonetheless, it is a provision that exists. What if you're divorced? If you were married for 10 years or more, you're now divorced and not remarried, and your own benefit is lower than what you'd receive as an ex-spouse, then you may also qualify for up to 50% of your ex-spouse's benefit if claimed at full retirement age, and again, this has no impact on their benefit at all. Social Security is designed to support workers and their families. It's designed to support the entire family. Whether you worked outside the home or contributed to the family in other ways, it is designed as a support system. This rule exists to protect spouses who took time off to raise children, care for aging parents, or support their partner's career, and it ensures that a lifetime of contributions in any form can lead to financial stability in retirement. There's a lot of noise out there when it comes to Social Security, but not all of it's true. Some of these myths are harmless and some of them are very costly. What's most important is that you understand how the system works so you can make the best choices for your future. What myth surprised you the most, or do you have another one to add to the list? Share your thoughts in a comment down below. I post new videos every single week. If you got anything at all out of this one, please give it a like. If you're new here, please consider subscribing, or if you know of someone who might get something out of this type of content, please consider sharing. I'll see you soon. Bye.